Pre-use living on channels for educational purposes only and is not intended as financial advice. Holiday this week, Thanksgiving, shortened trading week for the legacy players. We may see some lack of volatility. On the crypto side, we are still 24/7. No holidays, no breaks. But just because exchanges are open doesn't mean price goes anywhere, so keep that in mind. There's not too much to talk about price-wise, so I thought I'd go diving on-chain a bit, go over some dashboards, give you folks, you fine folks, most of you subscribing, 17% of you not subscribing, but the rest of you, super fine folk, some great dashboards and bookmarks for the upcoming, soon-to-be, very likely bull run here. Clark Moody puts together this Bitcoin dashboard, some great snapshot data, having estimate April 20th, 2024. And that's one thing you really have to keep in mind. Trading-wise, we each day get closer and closer to two things. Well, really three things, but first thing being likely ETF, second thing being halving, third thing being Fed rate cuts. Hopefully not because we are in a recession. Hopefully, okay. So those are the big three things, all three of which should be favorable, barring a recession, which I would argue is actually favorable for price because that washes out everybody one last time, like it always has, in and around halving. Something always happens. Then we can have a grand old time for the next 18 months or whatever it is. Something else that's been bubbling up over the past week is Bitcoin fees. And whenever this happens, it's always a good idea to, I'll have all these sites in the description of the video, by the way. When fees crop up like this, it's always a good idea to figure out what the heck's going on chain because that's a lot of moolah, you know what I mean? Not only that, but we are eclipsing Ethereum, which is very rare. So there's definitely something going on chain and kind of hints at Ethereum's weakness here, price-wise. If fees are high, that's because activity is high, and that's because people are using ETH to do stuff. These fees aren't low by any means, but they are lower historically maybe than they have been. And you can go down the list and find your favorite coin here and protocol and see, Cardano getting hardly anything per day. Doge, nothing. EOS, laughable, right? Like if you want to be honest about your favorite altcoin, go check out the fees per day relative to everybody else. Not saying the high fees are a good thing necessarily, but general indicator of what's going on with the actual, fundamentals of why this stuff exists. So if we look at the mempool, pending transactions by count, you can see we are rising again. This was Ordinals Mania related earlier in the year. And once again, it is actually Bitcoin NFT related activities. Once again, on chain, we can dig through that even deeper. This is a dashboard from Digital Assets on Dune Analytics. And you can see the inscriptions popping up here. That's what they call the NFTs for Bitcoin. And you can see the fees rising again. And we can see all sorts of fun stuff that, frankly, I could care less about. It is what it is, right? You can have one feeling that this dilutes the message, this is stupid, this destroys the purity that is Bitcoin. And the other side of this is, well, we need transaction activity. We need fees on chain eventually. I would much rather us experiment with the possibilities now than wait until, 2100 or whatever it is, year 2100, when we all of a sudden need fees and don't have any. So I understand both sides of it. Microtransactions just not where Bitcoin's ever going to be. We've got Lightning, and you could argue Lightning's broken. We've got other stuff coming, so there's always something. Something's always happening. That's the beauty of programmable money. We aren't stuck in the mud with XYZ narrative or problem at any given time. So keep that in mind. If you're anti-ordinal or anti-Lightning or whatever, there's always something bigger, better, brighter, bolder coming down the pipe. Here's another dashboard from Dead Always. Anyway, so ordinal stuff is happening. And if we look at some of this, look, it's not for me, but I get it, right? It's cool. It's interesting. I don't think people are buying these for the artistry, let's just say, but maybe, right? This is Magic Eden, and you can sort of see where the activity has come from over the past day, week, month, etc. If we look a little deeper specifically on chain, transactions per day almost hitting all-time high on a weekly basis. This is BitInfo charts coming in hot with the dark mode. So transactions are way up. Active addresses down slightly, and mainly that's because fees are rising again. You can see fees perking up there. And aside from when Bitmain was spamming the mempool during a bull run, we really haven't had sustained fee environments for an extended period of time other than last bull run when there was a ton of on-chain activity at that time. This was ordinals. The current spike is ordinals. And this was a Ponzi scheme. So a Ponzi scheme buying Bitcoin. So it's good to slowly see, this is the fee reward as a percentage of the total block reward. Eventually this will have to be 100%, right? So again, it's good to see this slowly rising over time. And after having, this percentage is going to jump even more, right? Because the block reward does get smaller in BTC, does get smaller in USD, at least temporarily, until price hopefully probably continues to increase. It's another interesting chart to watch after having, if ordinals continue to be a thing, right? It's interesting that even in a arguably bearish or more bearish period broadly, we don't have like normies here popping over to Magic Eden, my guess. I'm guessing this is like Bitcoin people, maybe NFT people. I don't think many people know what's going on here necessarily. And we're seeing the type of activity we're seeing fee-wise. So when this thing really takes off, it'll be interesting to see what fees look like, how that's going to affect the network, etc. Right? If we're going to see better layer 2 options than Lightning, just things to think about down the line. Because right now this is a quiet period, right? And we're seeing the type of transaction activity we're seeing. Another dashboard from the data always. If you want more granular look at transaction fees. And in general, as a holder, we want activity on the chain. We want fees to be high. Okay, that's the dirty truth of it all. Because that says people are using the chain. The same thing with ETH, the same thing with any chain. We want people here. We want people using the chain consistently. As a consumer or a transaction enjoyer on Bitcoin, right? I don't want fees to be high, but I don't transact on the Bitcoin chain frequently anyway, so it doesn't really bother me that when I do, fees are high potentially, right? Again, another way to think about that. Most people aren't on layer 1 transacting frequently. Most people, right? So if these people want to waste their money on NFTs, transacting and running up the bill, right? What do I care? It doesn't bother me. If anything, it helps the network on a fundamental basis, paying the miners. And speaking of miners, new little interesting Nightmare Fuel popped up. We've got 2 chains here approaching 56, 55+% of the total hash rate distribution. Foundry USA and Ant Pool. Luckily for us, if we look at the headquarters of these mining pools, luckily these both aren't in China and they both aren't in the United States. They both aren't in the same country, right? So it's very hard to coerce the miners within a pool, right? Even harder in 2 pools. Now, this isn't like the golden shining hill of decentralization here, but it could be worse. I hope it gets better. Foundry was approaching, I think, 30-something%. That's declined a bunch since they added a fee to the pool. Previously, the pool was feeless, but this is something to monitor on the sidelines. This is brains. They do mining stuff, let's just say. But really good resource. They have all sorts of metrics here that you've probably never even thought about. On the mining side, definitely take a look, should that interest you. For Bitcoin price, power law corridor, no issues here. Still arguably oversold. We are in a position relative to having where you'd expect us to be. Nothing really to add here. Tons of upside. Something to also just anecdotally watch is how many people are going to be analyzing this cycle and saying price will be less than the previous all-time high. We won't see any more all-time highs or something like that, right? Versus people who are saying last cycle was a fluke relative to the previous cycles. There was tons of rehypothecation. We'll probably go higher. That's a potential as well. We'll see. I'm kind of split either way. I think we'll see flows, and it'll be interesting what the world looks like post BlackRock ETF or whatever ETF we have at that point. Anyway, just a minor tangent. Do we go higher than the previous all-time high, right? I don't see how we don't, but I'm open for argument on the other side of that equation. Bitcoin weekly cloud still looks great. We're still kind of stuck underneath the yearly pivot. We're still in the year-to-date pitchfork, not quite overbought on a year-to-date basis yet based on the rate of change. Top of the cloud, On the weekly, it's still at 42. That hasn't changed. 47 is still the weekly level to watch in 2022. You know, there's a potential for, let's say, a move from 37 to 47, a wick down to 42. You know, I think it's going to be a nuts day, but maybe it'll just be a giant nothing burger when the announcement actually happens. Maybe everyone who wanted to buy has bought, and it'll be just flat out buy the rumor, sell the news day. I think at the very least, we will likely wick to 42 on that day. Then we'll see what happens. But all in all, still looks great on the weekly. No issues there. The daily, we certainly are overbought, and this is the same exact analysis for every single altcoin chart as well in the USD pair for the most part. We have the continuation of a TKC clamp. You can see when the Tenkin and the Kijun lines separate here. This represents price going straight up or straight down, and then a loss of momentum. We've seen that 3 times already this year. I'm not going to bet that magically we're going to keep going here and this is going to lead to bullish continuation. Me being bearish isn't spot USD, it's no leverage. So, you know, if we have an announcement on Monday, I probably won't be in leverage for that position, unfortunately, but that's just the way it is. I'm concerned that all these charts have a 20 to 25% down move potentially in them, just based on the daily Kijun here, which for Bitcoin is at 32. The bids are there. If I get it, I get it. If I don't, I don't. But I can tell you, as somebody who frequently has bids hit down in those levels, you know, you feel like a hero. Now you feel like an idiot if you don't get filled and we keep going higher, but it is what it is. I think the risk reward here is unfavorable, just sitting in a leveraged position. And I think you just kind of have to trade around the news event personally. And we can look at the 4-hour cloud as well. And you could rationalize and say, well, we're still in this channel. We're still above the 4-hour cloud. We've survived the inverted Eve atom. We survived potentially falling below the 4-hour cloud. So in times like this, I don't hate that we are still above the 4-hour cloud. You know, I think this is probably justification enough to be in a leveraged position with tight stops. You know, anything below the channel, right? For me, that's okay. That's it, right? Which in this case would also be below the cloud. 4 hours is a great time frame to watch when we are actually moving and trending. And you'll see that. I'll look at some alts later. Very similar analysis there. Bollinger Bands, we're still pushing the Bollinger Bands. Midline of the Bollinger Bands, the 20-week moving average is at 30. No risk of dropping below that currently. And you can see prior to having the previous 2 halvings, very similar positioning in that we are hugging the 20-week and or not quite moving yet, right? So in the moment, this still looks okay. Will I accept a recession angry retracement to 20K, 20,000 USD? Sure, why not, right? Like, look, there's COVID, you know? Could say that was all liquidity, that was all the Fed intervention. You don't think the Fed's going to step in if something goes wrong? Oh, they'll step in. They've always stepped in. They will do something. So it's just hard to be bearish longer term here for me. This is a guy, CryptoCon is his Twitter name, and he's got some interesting charts. This was on pointing out %B, and he's arguing here anytime we are above 0.88% on %B on a weekly. Sorry, this is monthly. On a monthly basis, that is signaled bull run territory. Definitely an interesting one to watch. If, as many assume is the case, that this is the start of the bull run, he's also got another interesting chart here recently talking about the phases relative to halving. Again, he's pointing to 42 to 48, which makes sense to me. Calls COVID an outlier, which I agree. Just interesting analysis, right? Kind of different than anything I talk about, but it makes sense, fits my bias. That's why it's in the video. All right, let's talk about ETH. ETH on chain has been quiet. It has been boring, as has the price. And you can see why, right? Transactions per day, flat. Active addresses, flat. Not too much going on in there. If we look over at Artemis.xyz, you can compare all your favorite shitcoins, right? All your EVMs, whatever you want. I'm just looking at ETH versus the layer 2s, Optimism and Arbitrum. Active addresses rising in the layer 2s, transactions rising in the layer 2s. Not much happening on ETH. And, the reason is likely because of the fees. The fees are, I guess transaction fees aren't on here. But if you look at the average transaction fees for Arbitrum, Optimism, very low relative to ETH layer 1. So in times like this, when there's not a boon of activity, that's probably going to cause issues when there's this glut of block space, right? And it's a glut in the sense that if you don't want to interact on layer 1, you don't have to. You can just go to layer 2, you go to some other chain. But if you still want to be on ETH, Arbitrum is a perfectly acceptable transaction medium. And collectively, you're seeing ARB and OP transactions per day exceed or match ETH itself, right? There's probably some double counting in there. There's probably some caveats with that, but it's not exactly a shining endorsement for ETH layer 1 at the moment. DeFi Llama also has similar metrics. I think Artemis actually takes data from DeFi Llama, but if you want to compare fees or TVL or whatever you need, that's also on DeFi Llama. Definitely something useful down the road. You can pop on Solana, whatever else you want there too. If you look at ETH on the staking side, ETH has its own decentralization problem still with Lido, 33%, and you get into this stake grinding territory. Not going to explain what that is, but there's a threat to decentralization at 33%. It has exceeded that or gotten close. Previously, it's still close. It's still an issue. I don't think it's not going to be an issue just based on the incentives for Lido versus these other exchanges. And even though we've had massive inflows to staking, price, hasn't really done too much. If you look at the validator queue, not a lot of people throwing ETH into a validator at the moment. And that exit queue slowly ticking up. I don't want to over exaggerate here or catastrophize, but it does appear as though there's some ETH coming out of some staking pools, right? And you're seeing the staking reward pop up a little bit. So ideally this hits an equilibrium where we can stop talking about it and people can stake, be happy. But if you're bullish, what you don't want to see is people exiting. Okay. You want to see that just Roach Motel type activity, right? Nobody comes out. Okay. My argument is this provides a bearish oversupply of ETH, let's say, as people are coming out of the pool. Anyway, just something to watch. On the price side, not much has changed in, 16 weeks, 35 weeks, whatever it's been. Still in the ascending triangle. 1990 is still the level. ETH struggling to hold 2K here. Doesn't look horrible. I like that we had a down week across the board. I don't know how Bitcoin closed up on the week. Honestly, sort of sprinted across the finish line, just barely in positive territory. But ETH has already had 4 up weeks. Solana, AVAX, all these other coins have had 4 or 5 up weeks. For the long-term health of a trend, you always want to see some give, some take, right? A little less take than give, but you need some take. At least I need some take to be happy, to be in a position from a risk-reward perspective. Anyway, 1990 is still a resistance or key level, let's say. Still in the weekly cloud. I still like 3K. I think this is one of the easiest slam dunk, no question about it trades, which means it's probably wrong. No, just kidding. But the question isn't where the price will go, it's just when. And that's where the money's made. Because yes, you can sit in ETH, you can go all in, right? Expecting 3,100. And you might not get 3,100 until April 2024. Meanwhile, Bitcoin's at 60K. And you're wondering, man, what did I do? Why did I do this? What did I do to myself, right? So I do like this as a breakout trade still from 2 to 3. It doesn't look great at 2, I'll admit, but plenty of confluence for 26, 28, 3,100, whatever. That all looks good to me. Definitely. ETH on the daily has pulled back quite a bit. It's been messy. It's been ugly. Still above the daily Tenkin. It's funny. It has a tweezer top on the weekly, had a tweezer bottom on the daily. If this retraces, I like, 1830, something like that on the Kijun. And eventually all this stuff will retrace. It'll either be the 20-week moving average or the daily Kijun. And obviously we want to see trend continuation. That isn't a guarantee, but that's why, that's a great place for bids. If we look at the long-term pitchfork for ETH, this is really incorporating 2019 data. From a risk-reward expectation perspective, this is the band where it's a fire sale, right? If you're comparing this to like the rainbow chart or something. 4,200 is the midpoint, probably one of my favorite pitchforks, and yet price is very minimally kind of in this pitchfork. It doesn't look great in this pitchfork, I'll admit, and you can argue with me about the anchor points here. I just like how this lines up with price throughout 2019. In any event, if you're bullish, it's charts like this that'll help you stay bullish because this is what you want to see. You want to see us catching the bottom, and you want to see us recapturing these diagonal levels. And you always have to remember ETH and all alts, ETH as an alt, does best after Bitcoin's halving. So that's another reason not to be sitting in ETH right now, just collectively. After halving, we typically see price appreciation on Bitcoin, inflows on stablecoins, attention, eyeballs, headlines, and then the hot ball of money shows up, whether it's retail, whether it's regulatory arbitrage, whether it's institutional, Main Street, Wall Street, whatever it is, don't care, right? But that's the time when we usually see an inflow of cash and rising prices for altcoins. So as for ETH BTC, still looks weak, still looks like nothing I want to touch, still below the weekly cloud. It's losing the 200-week moving average. It's about to lose a yearly support pivot. Not something I'm ready to jump in with open arms here. It's also got an M double top. It's, there's really no reason other than hoping a support holds here that I think this will actually survive at this level. And there's going to be a flow imbalance eventually. So yeah, I like some gross low that the ETH maxis are going to absolutely hate. Okay. That's what I like. 037. It'll be interesting if we don't see 3100 before 037. That's the dream trade. You should be rooting for that. Root for ETH doing nothing. Bitcoin going to 80. Okay. and then ETH catching up 6 months later. Okay. That's the easiest layup of a trade. The greatest setup. Seeing all these alts sort of pop off every other day, having this volatility is definitely where we want to be from a trading perspective. And we have had some inflow of staples. This is DeFi Llama again. Some inflows. All I really care about is Tether. But if we look at some of the other stuff collectively, we have seen some flows on, more of the scammy stables, which I'm not going to call it by name, but the biggest and most important one, arguably some people find scammy, is Tether. So we are seeing flows there still, which is a good sign for alts in the near term. We have had some alts relative to Bitcoin do well over the past week. Link is back up, AVAX. You could make an argument for paying attention to the alts that haven't done well over the past week, but I like buying strength or looking for strength rather than seeing what's weak here. Near is also another one that's done decently okay. But for the most part, there aren't too many that have just exploded. SNX is one that has exploded, but it's kind of muted across the board. I'd argue, right? There's 100 alts here. Most of these absolute junk. Most of these have zero fundamentals, zero reason for existing. So it's hard for me to pick those up seriously, right? To take those seriously with size. Anyway, let's look at some more charts. Sol, same deal, right? Overbought on the daily cloud, has had 3-4 drives at this point. 43 would be perfectly acceptable. Retrace based on the daily Kijun. It's even got a little bit of head and shoulders watch up here on the 4-hour. Again, the 4-hour looks great, right? This is what you kind of dream and hope for as a cloud trader, is to see this slow rise. Ideally, we see it on the daily, right? But we'll take it on any time frame. The 4-hour is good enough. We're holding the Tenkin. We're making new highs. We're retesting the Kijun here, right? We may get a TK cross recross this week on the 4-hour, which is also fine. I would much rather wait for the TK cross recross, wait to see what happens here with the head and shoulders potential, than just blindly saying, yeah, let's long at 60. Okay, that's me. We don't have an ascending triangle. We don't have any chart pattern here that looks like, to me in the moment, that this is going to lead to immediate continuation. So for Sol, I'd much rather wait. Link, daily Kijun around 11, has and had that tweezer bottom on the daily, since bounced. It's in the rear view, so who cares? Arguably had a little bit of a falling wedge. I just didn't like, even on BTC and ETH, this day over day buying, selling stuff. That range for me is too small. I know that's like 20% or something, right? But that doesn't give me comfort that this is something worth trading if we're seeing complete reversals day over day like that. Anyway, so daily around 11. And this is what I would watch for with Sol this week. Can Sol survive a potential head and shoulders? This is clearly head and shoulders here. Didn't break down to the expected target, which was around 11, but has recaptured the 4-hour cloud. So at this point, I'd be waiting for a bullish TK cross on the 4-hour, and that would likely be good enough. There's really nothing more bullish than cloud signals flip-flopping like that, and then you can add on to that. We're canceling a head and shoulders pattern. You can even see a little mini Adam and Eve here on super low timeframes, but in any event, this looks good on the 4-hour. not yet longable to me. AVAX, again, way in the stratosphere here, way above anything that makes sense. 1650. I think this would need probably a week or two to just relax. At this point, some of these alts are so depressed that normal trend evaluation may not even matter, because there's a potential to just see flows to this stuff that quickly reverses price. AVAX on the 4 hour again looks great. Multiple Kijun retests, currently somewhere around 19 there, losing momentum a little bit up here and definitely overbought, even on the 4 hour. So I'd be very careful with that one as well. RUNE, man, did I start a shitstorm with RUNE this week when I dared to question where the yield was coming from, if it was safe. And trust me, guys, all the RUNE people, they assured me it's completely safe. So just keep that in mind. Anyway, RUNE 4 would be the daily Kijun level to watch. Starting to roll over a little bit here on the daily. 4 hour has also looked great, right? Smooth retests, riding the Tenkin. Definitely looks a little tired up here, right? All these charts to me look a little tired. Link looks the best for finding out quicker whether or not we're actually going to see continuation. But me personally, I would just be careful with all this stuff. Just extremely overbought on the daily. Then we have stuff like Wi-Fi, which completely collapsed, right? This is my fear. This is my personal nightmare fuel. I know this is a messy chart, but this thing collapsed 40% over the weekend. Again, another token that to me has no reason to exist at all. That doesn't matter. But this caused a $9 million drain in the DYDX insurance pool. This was potentially part of what happened on the Woo exchange. I don't know if that was an outright hack or not. I don't think we know. But when we get extremely large moves, we start to see cracks in the system, right? So if collectively Sol, Link, AVAX, RUNE start to roll over in a big way, expect problems, right? That's just natural. And when you're seeing moves this quick in the opposite direction, things are going to start appearing, right? When the tide goes out, you see who's naked. Doge here, one last one for the week. Not something I'd touch. Okay, look, I get it. There's an audience for it, but it doesn't look terrible. It does have this Adam and Eve characteristic to it. Probably 10 to 11 max would be the target in the near term. I think the dream edge-to-edge move would be 10 to 20 cents. I don't think there's enough retail juice in the system for a 10 to 20 cent move on Doge. But hey, I could be wrong. So that's all I have for this one today. Let me know if you liked the integration of more on-chain stuff or not. Thanks to all the Atmosphere aficionados who've joined the club in the past couple weeks. Like, dislike, comment, share, subscribe. Have a great Thanksgiving. See you tomorrow for Macro Monday. And happy trading.